Hello, this is Tom Cloud with my bi-weekly precious metals market update. Today's going to be kind of harem scarum because I want to answer all the questions that have come in the last 2 weeks, because not all of them, but the ones that I think are worthy of that you'd be interested as an audience in doing. Let me start by talking about a checkup on platinum. I've had so many of you write after the COVID-19 came out. We saw platinum drop all the way to 2002 levels, and it was scary for somebody because we'd given a buy signal twice last year on this show at 726 and 752, and then we saw it go all the way up to 900, and then when the COVID thing came, it came from 900 all the way back in the 600s back in March, early April, and people were calling, what do I do, what do I do? Because basically you were seeing a slow and catalytic converter demand for cars around the world. We were in a shutdown, things were going on, and platinum was one of the things that took it in the shin and fell down. Now, as I speak to you right now on June 23rd, here we've got platinum back over 800, and we're now seeing that it is nearly impossible to get physical platinum. You can buy it in the futures market or an ETF, but to have it the way you want it in your hands, it's very hard to get, and the premiums are high, which leads us to believe platinum is headed much higher. Remember, the 44 years that I've been doing this, I don't know exactly, 35 of those years, platinum has been more expensive than gold. Now you've got gold at 1760, 1,760 per ounce, and platinum at less than half of that, when platinum is 40 times more rare than gold. So yes, I'm very, very bullish. But let me read this to you where I don't mess up by trying to remember it all. This is a report that came out this week. There is a silver lining in platinum demand from the medical front. Researchers continue to use the metal to combat some of the world's most pressing health issues, including fight against COVID-19. Platinum is a material of choice for electrodes and the blood gas analyzers, which are some of healthcare professionals' most crucial tools in treating COVID-19 virus in hospital patients. Platinum catalysts and the chemical sector are also used to manufacture personal and protective equipment. These are called PPEs, and other disposable medical products, which have experienced unprecedented demand in the recent months due to COVID-19. So here we've got this incredible use that's going to continue, and that's the reason you've seen platinum jump from the 600s up to 815, 820. That's the spot price. Of course, as I said, premiums are higher to buy the platinum bars or platinum coins, but you also get a lot more for them when you sell them because of the severe shortage in the physical market. So I still look for platinum to get up. When gold gets up to 2,000, I expect platinum won't be too far behind. So you actually, if you're well-rounded in your portfolio with gold and silver, yes, my update today tells you to add platinum, and I am glad to see it make such a big run after dropping all the way below 700 there in March due to the uncertainty in the world, and especially the catalytic converter demand for cars. So that's the platinum update. The next thing I've gotten probably 20, at least 20 emails about is the economist Stephen Roach. Stephen Roach is a Yale University professor that I've read for over 20 years, and he came out last Friday and said basically the dollar is toast. And you got to realize we have 330 million people roughly. China has 4.5 times the people, and they're spending less on their COVID to stimulate the economy than we are. They're 4.5 times bigger, and we're printing more money. Now, here's what's mind-boggling. From 2016 to 2019, 4 calendar years, the average debt was around $5 billion to $5.5 billion per day. You multiply that times 365, and you can see the deficits under Obama for 8 years and 3 years under President Trump. We've averaged 1.4 to 1.7 trillion. Once again, approximately 4 to 5, between lower 4 to 5.5 billion every single day. And I've sent you many times to the debtclock.org, usdebtclock.org, to see these deficits. So that's alone. Now, we're 5 months into 2020, and we are averaging, it's not going to average this all year, but for the first 5 months, 26 billion a day. So what we see now is that through 5 months, we've already had $3.8 trillion of deficit. We've never had over 1.7 in history. Now we're at 3.9 already, and even if we cut the deficit budget needs to 13 billion a day average for this year. Remember, right now it's doing 27. The deficit is going to end up being this year at least 6.6 or 6.7 trillion dollars. 5 trillion more than it's ever been. So what do? You issue debt. You go out and create bonds, and right now interest rates are very low. People are scared to death. They're out of the stock market. They're moving into real things like real estate, like gold, like silver. So now you see all this coming in, and you've got to realize that this debt's got to be repaid, and interest rates are going to go up. And you're going to see them going up very soon, because especially in an election year, Trump's not going to throw the towel in. He's going to print money like he already has. He's going to keep printing money like you've never seen in anybody's lifetime except the Weimar Republic back in Germany during what led up to World War II. So remember, we've got to go out now. The Chinese now have $2.5 trillion of our debt. The Japanese nearly $2.5 trillion. That's 5 trillion of the debt that they own. Is about 20%, 25% of the total debt that we owe right now. So what's going to happen when they don't like the way Trump's dealing with them, even though Trump could be right, and they cash their chips in? The dollar goes, as Stephen Roach says, the game is over. Banks fail. And we've talked about many times on this show, your money in the bank is not yours. You're a preferred lender. You loan money to the bank. But if the bank can't repay you, you have no recourse. We've already seen it over a few years ago over in Cyprus. So we've seen money pouring out. We had more money in the last month coming in to gold and silver, coming out of people's checking accounts and coming out of major corporations. I'm talking about big corporations moved millions of dollars through us into it, because they don't want to sit there knowing the FDIC has hardly any assets compared to what they have insured. So once that little bit's gone, it's over. So yes, you need to be looking at that if you have large amounts in your checking accounts, corporate accounts or individual accounts. So Stephen Roach says the dollar is going down, 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 because we're printing more money than anybody in the world by far. So we've touched on Stephen Roach, we've touched on the debt, and now we've got a lot of questions about the Peruvian supply in silver. It has plummeted. It has plummeted. this chart I have right here shows for 12 months that about 330 tons a month is what was being produced in Peru. And that went on for 10 months. The last 2 months, instead of averaging 330 tons per month, it went down to 215 for the month of March, and for April down to 85 tons, about 20% of their normal. We're seeing bad supply channels, expense to get it there going up, premiums going up, and supply going down. Silver's gone from 1380 to 1760. It touched 18 in the last week, and it's going to go fly past 18 soon. We do have some decent supply in 3 or 4 coins like the silver kangaroo, the silver Britannia from England, the silver kangaroo, and the silver philharmonic, and the silver round. So we've got all those in stock, and I would urge it because premiums have come down a little bit in silver, still higher than normal, but they're going to look like nothing when this thing takes off. And silver is going to take off. We've talked about it too many times, but because there's always a chance of a depression, which would cut demand for silver, except in the industrial demand for catalytic converters. But even in the car industry, where we're going to electric cars around the world over the next 4 years, you've got to have a decent economy to buy that. So silver still is, investors are coming in and moving money into it, and that's what's driven it up $4 over the last 2 or 3 months, and it's going to go much, much higher. So what I do every week lately, closing every other week, we want to talk about IRAs, because that's still the fastest part of our business. Baby boomers are retiring like crazy, so when they come out with the 401ks, they're making them 2 self-directed precious metals IRA and a stock and bond IRA. They put what they want in each one. We can be your supplier, we can be your representative, but you've got to get a custodian, and we'll give you 2 or 3 to check out. But you need to call us at 800-247-2812. That's 800-247-2812, and talk to me or Dan, and we can help you get a precious metals self-directed IRA set up. And definitely you should have a 10 to 33% of that's what we're seeing most of financial people telling them when they roll out, 10 to 33% in the precious metals. The other in their stock and bonds, even though that's up to you personally what you want to do. But I feel sure that you're going to see some incredible changes in the precious metals going forward. And like I said, we had a good week, but please, this week was about the dollar collapsing. It's already gone from 123 down to 90, and you've seen what the metals have done. And if you haven't heard today, gold has hit an 8-year high since it peaked out back in the fall of 2012, and then we saw it drop way down, and now we see it back, as I said, the 1,760 range, and going much, much higher as central banks continue to not want their money in paper fiat currencies, money by decree, worthless toilet paper in the long run. So if we can answer your questions, give us a call, and certainly we keep the questions coming, because today were some great things about platinum, about the silver supply, and what's going on in the IRA market. Baby boomers retiring like crazy. So hopefully we covered all those, and keep them coming. We'll see you in 2 weeks from today with this bi-weekly Precious Metals Market Update. This is Tom Cloud signing in.